Welcome to The Explainer. I am absolutely thrilled to have you here today because, well, we are tackling a topic that has the entire financial world holding its breath. Look, for the last decade, Bitcoin was undeniably the best performing asset on the planet. It just felt unstoppable. But right now, the tables have completely turned. Today, we're looking at a reality where Bitcoin is officially down more than 50% from its all-time high. It's a massive drop, and it's got everyone on edge. So let's dive right in and unpack exactly what's happening. Right now, some of the best investors in the world are literally calling it worthless. I mean, that perfectly captures the extreme fear gripping the market today. When the heavyweights start throwing around words like worthless, everyday investors understandably start to panic. The situation has gotten so severe that everyone is asking the exact same fundamental question. Is the cryptocurrency experiment finally broken for good? Or, paradoxically, is this the exact moment, the ultimate generational buying opportunity that's going to mint the next wave of millionaires? To figure that out, here is our roadmap for today's explainer. We'll cover the Bitcoin sell-off, the MicroStrategy threat, historical cycles, the realized price indicator, bear versus bull predictions, and finally, real crypto strategies. Okay, Section 1. The Bitcoin sell-off explained. The 5 catalysts driving the fear. The fear really starts with one massive number, 25,000. Recently, large holder accounts, the ones we call whales in the crypto space, dumped 25,000 Bitcoin in a single week. When the biggest players in the room suddenly sprint for the exit, it creates this massive psychological shockwave. It sparks an immediate chain reaction of panic selling among everyday investors who see these whales dropping their bags and just assume the absolute worst. But that whale selling, it's just one piece of the puzzle. There are actually 5 main catalysts working together right now. First up, we've got a massive risk-off rotation. Scared investors are pulling money out of crypto and parking it in safer assets, like cash and bonds, or they're chasing higher upside trends like AI. Second, those shiny new Bitcoin ETFs, they're working in reverse. Initially, ETF buying forced funds to buy Bitcoin, pushing prices way up. Now, as people sell the ETF, funds are forced to liquidate the underlying Bitcoin, driving prices right back down. Third is that massive whale selling we just talked about. Fourth, the hype has simply dried up. A year ago, we had legislative momentum, institutional buzz, the whole shebang. Today, that news cycle is empty. And finally, perhaps the most damaging, the loss of conviction in the digital gold narrative. For years, Bitcoin was touted as this ultimate hedge against chaos. But when chaos actually hit recently, traditional stocks, silver, and actual gold went up, while Bitcoin went down. And when a narrative fails, well, people sell. Moving on to Section 2, the MicroStrategy threat, the systemic risk in the market. You really can't understand this current crash without understanding the massive risk posed by one specific corporate player, Michael Saylor's MicroStrategy. Back in 2020, MicroStrategy basically pivoted to become a Bitcoin treasury. They didn't just buy a little bit, they issued debt and sold stock to buy as much as humanly possible. Just to put the staggering scale of their bet into perspective, they now control a whopping 4% of the entire global Bitcoin supply. That's roughly $64 billion invested at an average price of around $75,000 per coin. They hold immense power to move this market. And right now, the tension is just immense. With Bitcoin trading down around the $60,000 mark, MicroStrategy is currently sitting on a massive $12.5 billion paper loss. When a single entity controlling 4% of the global supply is that deeply in the red, the entire market sweats. Now, a lot of people are terrified that a margin call could force MicroStrategy to sell and drive the price to zero. But actually, if we look at the source data, they didn't use margin loans. They issued convertible debt. So a traditional margin call isn't the immediate threat here. The real threat comes from plummeting dividend stocks. The recently created dividend fund is trading way below its target, meaning they might not be able to pay out promised dividends. This has forced the company to adjust their framework to actually authorize the potential sale of Bitcoin if they need to. Add in a wave of fresh class action lawsuits from panicked shareholders, and you've got a recipe for severe market anxiety. Honestly, even the mere whisper that MicroStrategy might sell is enough to terrify the market. All right, Section 3, Bitcoin's historical cycles. Zooming out for a reality check. I know things look incredibly bleak right now, but let's take a breath. When we actually look at the data, the tone dramatically shifts from this unprecedented panic to, rational predictability. Over the last 15 years, Bitcoin has followed an almost robotic 4-year cycle. It slowly grinds higher, goes completely parabolic where everyone feels that intense FOMO, and then it crashes violently. The historical data shows a 99% crash in 2011, 83% in 2013, 84% in 2018, 74% in 2022. These catastrophic-looking crashes, they're actually standard operating procedure for this asset class. So juxtapose all those devastating historical numbers against our current situation, a 53% drop. When you place it side by side with Bitcoin's history, a 50+% drop isn't crazy at all. It's not unprecedented. In the grand scheme of Bitcoin's historical cycles, this current pullback is actually completely normal. Which brings us to Section 4, the realized price indicator, finding the market's floor.
If this crash is normal, the next logical question is, how do we know when it's over? Well, history shows us there is one specific metric that is absolute gold for finding the market's ultimate floor. That metric is the realized price. Think of it like this. It's simply the average price that the typical Bitcoin holder paid for their coins. It's essentially the ultimate break-even point for the entire global market.
Right now, that realized price sits at roughly $53,000. Why is this specific threshold so critical? Because historically, we're talking the bear markets of 2015, 2018, and 2022, every single time Bitcoin briefly crashed below this exact metric, it marked complete investor capitulation. It's that moment all the weak hands are shaken out, forming a rock-solid bottom before the price parabolically skyrockets higher. $53,000 is basically the historical line in the sand. But, we do need to issue a quick word of caution here. Cheap does not guarantee an immediate bottom. Right now, only 46% of all Bitcoin is currently in profit. And what's really alarming is that this exact percentage matches the absolute lows of the brutal 2022 crash. So this data suggests that while we are low, a final brutal capitulation moment, a true flush out of the market, might still be waiting for us just ahead. Moving to Section 5. Bear versus bull predictions, the extreme divide in expert consensus. Because we are at this precarious precipice, financial experts are wildly, almost comically, divided on what happens next. The sheer absurdity and polarization of the current market is just fascinating. On the bearish side, you've got legendary billionaire investors like Warren Buffett and Jeremy Grantham outright predicting Bitcoin is a useless speculative mechanism going to exactly $0. Zero. Then, on the bullish side, you have major institutional firms like ARK Invest doubling down, predicting a single Bitcoin will be worth $1 million by 2030. 0 to $1 million. You literally couldn't ask for a more extreme divide in consensus. But if we tune out the absolute loudest voices on the extremes, what does the moderate middle look like? Well, 10x Research sees a bottom forming around $55,000 somewhere between late August and October. Meanwhile, looking a bit further ahead, most major firms remain highly optimistic for the year's end. CoinShares is targeting a finish between $120,000 and $170,000, and Standard Chartered forecasts a $150,000 finish. So, outside of the loudest bears, the institutional expectation is still overwhelmingly pointing upwards. Section 6. Strategies for Crypto Investors. Removing emotion from the equation. So what do you actually do with all of this information? The goal here is to give you actionable, logical takeaways to survive this volatility. First, let's look for a silver lining, which is tax loss harvesting. This means selling an asset at a loss to offset other capital gains on your taxes and then buying back in. And here is the crucial takeaway for crypto investors. If you hold physical Bitcoin, not an ETF, but the actual physical asset, there are currently no wash sale rules. That means you can sell your Bitcoin, instantly lock in that tax loss to save yourself money, and immediately buy right back in at the exact same price. It's a calculated move that savvy investors use during crashes to essentially get a huge tax discount on their holdings. Beyond taxes, here are the 3 core rules to surviving the crypto roller coaster. Step 1, defeat your own emotions. Hope makes you buy at the top, fear makes you sell at the bottom. Buy only what you can truly afford to lose. Step 2, size your portfolio correctly. Look, if a 50% drop causes you to lose sleep and panic, you simply own too much of it. Size it so you remain completely unfazed by the swings. And step 3, do the exact opposite of what your gut tells you. When you feel euphoric and think it's going to $1 million tomorrow, it's usually a terrible time to buy. But when you feel that pit in your stomach and think you should sell and run away because sentiment is so negative, historically, that is the exact time you should be buying. You've got to replace hope and fear with cold, calculated strategy.
Which leaves us with one final, pretty provocative question to ponder today. Considering Bitcoin has survived the largest liquidation event in its history, severe global conflicts, and the breaking of MicroStrategy's never sell promise, and yet it still trades around $60,000, is this a falling knife going straight to zero? Or, when you zoom out and look at the historical data of its robotic 4-year cycles, is this actually a generational buying opportunity hiding in plain sight? The experts are divided, the charts are undeniably tense, but now you have the data to decide for yourself. Thank you so much for joining me on this deep dive. Let me know what you think, and I'll catch you on the next explainer.